Have you ever wondered if Bitcoin is a better investment than traditional options? This question is not just a passing thought, but a contemplation that has been stirring the minds of many investors in recent years. As we stand on the brink of a financial revolution, it's essential to understand the core concepts of these investment avenues. On one hand, we have Bitcoin, a digital currency, often referred to as the gold of the digital era. On the other hand, we have traditional investments, time-tested avenues like stocks and bonds that have been the go-to for generations. In this video, we aim to draw a comparison, a contrast between these two vastly different yet intriguing investment options. We'll be venturing into the depths of each, exploring their benefits, their drawbacks, and ultimately how they stack up against each other. So fasten your seatbelts and prepare for an enlightening journey. Stay tuned as we delve into the world of Bitcoin and traditional investments. Firstly, let's demystify Bitcoin. Bitcoin. It might sound like a futuristic term from a sci-fi novel, but it's very much a part of our present reality. It's a form of digital currency, a cryptocurrency, if you will. Unlike physical currency, there are no coins to jingle in your pockets or paper money to fold in your wallet. It exists purely in the virtual world. The story of Bitcoin began in 2009 when an anonymous entity known as Satoshi Nakamoto brought it into existence. Nakamoto's identity remains a mystery, but their invention has revolutionized the world of finance. Bitcoin was the first cryptocurrency, and it remains the most well-known and widely used. But what makes Bitcoin unique? The answer lies in the technology that underpins it, the blockchain. The blockchain is a decentralized ledger that records all transactions of Bitcoin. It's transparent, secure, and tamper-proof, making Bitcoin a trusted form of currency despite its digital nature. Unlike traditional currencies that are controlled by central banks, Bitcoin operates on a decentralized system. There's no central authority, no government oversight. It's the users who maintain the system. This decentralization is what gives Bitcoin its allure and also its volatility. Yes, Bitcoin is volatile. Its value can swing wildly in a matter of hours. This volatility, while it may seem like a drawback, is also what makes Bitcoin an attractive investment for some. With high risk comes the potential for high returns. Remember the Bitcoin boom of late 2017, when the price of a single Bitcoin soared to nearly $20,000? That's the kind of potential we're talking about. Of course, with such potential also comes significant risk. Investing in Bitcoin is not for the faint of heart. It's for those who can stomach the roller coaster ride of its value fluctuations. Now that we have a basic understanding of Bitcoin, let's compare it to traditional investments. When we talk about traditional investments, we're referring to stocks, bonds, real estate, etc. To start, let's look at stocks. Stocks represent ownership in a company and a claim on part of the company's assets and earnings. When you buy a stock, you're buying a piece of a company, hoping that the company will be successful and the price of the stock will increase. But remember, as the company's fortunes rise and fall, so too does the value of your stock. Bonds, on the other hand, are like IOUs. When you buy a bond, you're essentially lending money to an entity, like a corporation or government, for a fixed period of time. In return, you receive interest payments at predetermined intervals and get your initial investment back when the bond matures. Then there's real estate. Investing in real estate typically involves buying property, either residential or commercial. The goal here is to earn a return either through rental income, the future resale of the property, or both. Now, what ties all these traditional investments together is the concept of diversification. This is the practice of spreading your investments around to reduce risk. So, instead of putting all your eggs in one basket, you invest in a mix of stocks, bonds, and real estate. The idea is that if one investment performs poorly, others may do well and offset the loss. This leads us to the importance of a balanced portfolio. A balanced portfolio is designed to achieve a reasonable return while minimizing potential risk. It typically includes a mix of different asset classes, each carrying a different level of risk and return. The exact mix depends on your personal risk tolerance, investment goals, and time horizon. Compared to Bitcoin, traditional investments are relatively stable. They've been around for decades, even centuries, and have a track record that investors can study. While they can certainly go down in value, they don't tend to have the extreme price swings that we see with Bitcoin. With this understanding of traditional investments, we can now start comparing them with Bitcoin. So how does Bitcoin stack up against traditional investments? Let's dive in and compare them on 4 key fronts: return on investment, risk, accessibility, and diversification. When it comes to return on investment, Bitcoin has shown impressive gains since its inception. It's not uncommon for Bitcoin's price to increase exponentially within a short period. Traditional investments, on the other hand, such as stocks, bonds, and real estate, typically offer steadier, more predictable returns over time. They might not have the potential for a meteoric rise like Bitcoin, but they also tend not to plunge as dramatically. Now, let's talk about risk. Bitcoin's volatility can be a double-edged sword. The same price swings that can lead to massive gains can also result in significant losses. Traditional investments are generally less volatile. They might not offer the same thrill, but they also don't keep investors up at night as much. Next up is accessibility. Bitcoin wins hands down here. Anyone with an internet connection can buy Bitcoin no matter where they are in the world. Traditional investments, meanwhile, often require a brokerage account or a realtor, and they can be laden with fees and paperwork. Finally, diversification. Traditional investments shine in this aspect. There are countless stocks, bonds, and real estate opportunities to choose from, allowing investors to spread their risk across different sectors and geographies. Bitcoin, while it's the largest, is just one of thousands of cryptocurrencies. However, it's worth noting that investing solely in Bitcoin does not offer the same level of diversification. So what's the verdict? Well, it really depends on your financial goals and risk tolerance. Bitcoin can offer high returns and easy accessibility, but comes with significant risk and volatility. Traditional investments may not be as exciting, but they offer steadier returns, lower risk, and great diversification options. As we can see, both Bitcoin and traditional investments have their own unique advantages and challenges. The question remains, is Bitcoin a better investment than traditional options? As we've seen, both Bitcoin and traditional investments come with their own unique aspects. Bitcoin, a decentralized digital currency, offers potential for high returns but also carries significant risks due to its volatility. On the other hand, traditional investments like stocks and bonds are backed by tangible assets and have a long history of stability, but they may not offer the same potential for rapid growth. In making an investment decision, it's crucial to consider your personal financial goals. Are you looking for short-term gains or long-term stability? What level of risk are you comfortable with? Your answers to these questions should guide your investment choices, whether in Bitcoin, traditional investments, or a diversified mix of both. Remember, the best investment strategy is one that aligns with your financial goals and risk tolerance. Thanks for joining us in this exploration of Bitcoin and traditional investments.